Hello and welcome to our Yardi Matrix Student Housing National Outlook on September 29th, 2021. My name is Megan Clay, your producer for today's program. We are joined today by our host Jeff Adler and Ron Brock Jr. Our program will run about an hour and we hope you can stay with us for the entire broadcast. We want this to be an interactive conversation, so please feel free to submit questions in the Q&A icon at the bottom of your screen, and we will try to respond to your messages while covering relevant topics. If we don't get to you, please contact us afterward for a more detailed answer. A recording of this broadcast and accompanying slides will be available after the program. Please note that what we discuss today may or may not be relevant to our situation. Please read the disclaimer carefully and consult your tax and investment advisors before making any decisions. Now, I am pleased to welcome Ron Brock Jr., Industry Principal, and Jeff Adler, Vice President of Yardi Matrix, to our program today.
Thank you, Megan, and thank you all for joining us today. We're going to cover a lot of ground today, but really kind of focused on, I would say, the tactical components of what's going on in the student housing industry. The agenda is, we'll basically give you an overview of what's going on, how the school year finished up, fundamentals, what our forecasts are, and then kind of we'll begin to touch on some of the important trends that will impact the industry and topics we'll pick up as we kind of go into the next year. So the focus on this one will be far more but I would say tactical than strategic, having come out of COVID. So just as a way of sort of giving you our overall perspective is, first, early indications of fall enrollment show significant, meaningful growth at competitive big name universities, what we had thought before. There was a surge in leasing in July and August. So that the pre-leasing percent at 91.5% at the end of August kind of exceeded 2019 levels, and rent growth also moved up to an average of 3.4%, having been sort of flat to 1% through much of the sort of pre-leasing season. We'll cover the sort of winners and losers of this, but again, mostly large universities and with a sort of a tilt toward the south, east, Texas, and Midwest and mountain areas. Supply is still kind of coming, Texas and Florida, and we'll kind of go at a university level talking about supply levels. Transaction volume is beginning to pick up, and I think will pick up. This leasing season has demonstrated the sort of business case of the sort of downside protection of student housing. And therefore, I expect values to kind of pick up, as well as transaction activity pick up from here, certainly on a go-forward basis. I think as we kind of go forward on this, what will kind of be one of the big themes is the emerging consolidation and of the higher education sort of system in the United States around these larger Tier 1 universities that will gain share as sort of weaker schools consolidate, both from a financial perspective and a demographic perspective. We're very positive on the outlook. And when you look at even at the universities that didn't seem to do well, it's really driven by isolated properties that didn't do well, where the bulk of the properties have done extremely well. So kind of the sector is really in kind of good shape. So on an enrollment kind of summary basis, interesting this year, most universities, thousands of them, didn't require SAT or ACT scores. So there was a surge in applications, particularly among the more selective universities to begin with, kids saying, why not kind of go for a stretch school, see how things go. And where in terms of enrollment and applications were going into the larger schools, smaller, less competitive universities didn't. Our early indications of actual fall enrollment, big name universities recording enrollment growth. We'll see a pop this year, kind of making up for 2020, and then kind of settling it down more on a kind of a normal demographic basis. But ASU, Missouri, Purdue, OSU, University of Arizona, these big schools doing quite well. The other thing is more of a trend issue is that most of these flagship schools have increasingly kind of strayed from the original mission in that because of the out-of-state tuition delta, that's where they're sourcing students from in order to get the higher sort of tuition and fees. the exception of North Carolina and Texas, that's been a trend in all the state schools as the schools themselves become more profit making. And that has an influence on overall student debt. But the universities, I think, are under financial pressure to do this absent public policy consensus. So one of the things to kind of note is if your business case is built around a university or a large state university, one of the sort of selection criteria is also the acceptance rate. Only about 25% of the schools in the Yardi 200 accept less than 50% of the applicants, which means that these other schools really are exposed to demographic pressure as the sort of student age population begins to decline, and will need to take students from weaker universities if they are to sort of continue to sustain or even grow their enrollment. Something to sort of keep track of as we move forward. Now, obviously, one of the bigger topics was COVID in general and the Delta variant in specifics. What's interesting, I think, is that this is 1,000 universities nationwide, and we cover something like 1,200. They've opened. There's some vaccine requirements for some students, for some employees. The bottom line is the schools are open. Now, there may be sort of bumps and problems along the way in terms of exactly how they respond and the student base, but the schools are open. And from a perspective of student housing, with the schools being open, housing's happening, and those beds are getting filled. We do expect that will kind of roll out. There are a handful of universities disenrolled students who didn't comply with vaccine requirements. But again, when you comment between vaccines, testing, isolation, the bottom line is the schools are open. And that, I think, from student housing perspective, is the key kind of takeaway, that the schools aren't going to shut down, as we didn't think that they would going into this year. They would find a way to stay open, and they have. Now, as we kind of shift to fundamentals, the big news, right, is that if you look at the pre-leasing as of the end of August, and there'll be pickup in September as we kind of lock down on a final number. There's probably a 1 or 2% pickup, and in some of the B and C properties, 3 or 4% pickup even. But the big takeaway here is that pre-leasing was above 2019 levels. Much less significantly better than 2020, and it all came in a hurry at the end. And if we look at this in terms of pre-leasing curves by type of property, even though Class B looks like it's a little weaker than the A's and the C's, it actually is 5 points better than last year. And Class C is 3 points better, and Class A is about the same as they were last year. So those B's really picked up quite a bit in this leasing season. Then when we look at distance from campus, there's a little bit of noisiness, but the thing to note, and I would say, is that Class A, who I'll call close to campus, did much better up until the very, very end, where then where the properties that were a little further away kind of shot up and all kind of clumped around a particular sort of narrow band within a couple of points of each other. And part of this is also driven by how the pricing goes relative to campus. But the bottom line, as I'd say, is that it looked at, we think that the basic notion of being closer to campus also results in higher price points, kind of holds together. Now, when we look at the university, now we're going to shift to sort of a university by university view, right? Number of schools did incredibly well, right, relative to last year. And even in the face of, like, say, Georgia Tech, even in the face of 1,000 beds being delivered, they're pre-leasing really, really, really well. University of Arizona, same story, right? A lot of beds. Now, the University of Florida, interesting kind of case here is that they actually delivered a bunch of beds. Pre-leasing looks kind of good. The issue for the University of Florida will be what the go-forward look is. But a lot of schools did real well. And now there are some ones that appear not to have done that well. Now, for example, Miami of Ohio looked like it kind of got nicked, but it's really 3 older properties that didn't do well. Everybody, all the other ones did just fine. I mean, Ron, I think you've got a couple of comment on Utah State.
Yeah, Utah State, it actually is very favorable. It's 100%. There's really 7 dedicated student properties there. 6 of them are at 100%. This one was set to open for the fall of 2021, but had to defer just because of construction completions. So they're taking reservations for 22 now. So it's a strong market. And that goes the same with the University of California, Santa Barbara. They're sitting right now at 100% across the board.
Right. And in Utah State, actually, rents were up 3.8% for the school. University of Kentucky, as an example, the issue is two properties that didn't lease up well, but rents for the whole campus up 3.7%. SUNY Buffalo was really one property that struggled on its lease up. Everybody else was, high 90s to 100% pre-leased. So, and then, so that when you look at that, you kind of say, really where there are problems, they seem to be very episodic or very isolated, as opposed to, at a university-wide level. Again, demonstrating kind of, I'll call it the strength of good operating platforms, good locations, and solid fundamentals. Let's go to the next slide. Now, there were some kind of big winners, right? Absolutely, in the pre-leasing level, a number of schools like all did incredibly well. The ones that, let's say, didn't do well, again, it's this notion of a kind of isolated situation. The University of Louisville was, I'll call it, the more challenged. 3 of the 7 properties, had troubled lease ups. In the Seattle campus, it really was of a wide. That's a much deeper market. 2 or 3 troubled lease ups, but rents were up 5%. Even at the University of Louisville, rents for the remaining properties and the schools overall were up 3.5%. An interesting kind of note on Temple: if you actually split Temple between the properties just around Temple versus the ones that actually leak into Drexel and Penn, then Temple itself, pre-leasing is at 86%, up 13% versus the prior year. The issue there is more the properties around Penn and Drexel were the ones that are struggling, 72% versus a 98% pre-leasing in 2019. So again, kind of episodic when you look at those at the properties there. But in general, the schools are doing, these large schools are doing well with again, some isolated situations of failed lease ups or problems. And although the University of Alabama, as an example, which looks kind of low at 81%, is actually better than it was in 2019. And even when you peel that back, at 81% is really kind of 2 worlds. A group of properties that are at the far edge east of campus that's in the 60s, and everything else which is fully leased up. So again, as you kind of peel back, these school averages can be helpful sometimes, but when you see one that looks like kind of ugly, when you peel back the onion, it's a very different story. So when we look at rent growth, right, you can kind of see what the point that I was making before is the increase in demand and the increase in prices came really in a hurry in July and August. That's when kind of like the switch got turned on. Like, yes, the schools are going to be open, and yes, the demand came and resulted in higher lease rents. When we look at this on a bedroom, kind of based on bedroom basis, you can kind of see as we move into the leasing year that studios did not get the kind of rent increases they had in 2020. And then again, you kind of had the 1 bedrooms and the 2 bedrooms that were leading, but then right at the end, the 3 and 4 bedroom units that were less expensive on a per bed basis shot up, and the performance was really kind of quite good. This is when we break this out between Class A, Class B, Class C, and that definition of Class A, B, and C is really based upon our property rating system, which is based upon improvements. We use 12 criteria for improvements. We scale them on a numerical score, then convert them to a letter grade, a commonly kind of accepted process. Again, Class A did really well again at the end. Everybody saw this meaningful spike. You can kind of see where Class A rents rose because there was less to pre-lease. Class B picked up the largest in pre-leasing, and its rent growth was a little bit moderated. But again, still really good for what had been done historically. And then we also look at this for rent growth on a distance from campus. Again, you can kind of see that, amazing spike right at the end in July and August, where, rents kind of popped based upon distance from campus. Then we look at properties that, in terms of highest rent growth on a year over year, right? You can look at Georgia Tech, again, rent growth of 11%. With 1,100 units delivered. Now, there is an impact here of deliveries at the higher end, since these aren't. This metric isn't a same store sales metric. So, the deliveries of new beds at higher price points could, in fact, inflate this number. But what it does kind of say is, even in places that didn't occur, like University of New Hampshire and UNLV, strong rent growth in a number of these universities. Again, if you look through this list, you generally see South, East, and West. There are, like USC, LA was kind of reopening enough that it benefited from that. And again, when we look at ones that with the lowest growth, I'll just again look at Miami of Ohio, 3 old properties that are really kind of struggling with newer product. SUNY Buffalo was that one property. University of Alabama, really driven by those handful of properties on the eastern edge of campus. And everywhere else, these aren't wonderful rent growth, but if the worst that the industry did is 2-ish%, except for a handful, that's a pretty solid outcome for the industry overall. On the supply side, deliveries really didn't slow down. If you look at that, 2020, 4.8% of stock. 21, we think it'll end up at 4.6% of stock. So the supply does keep coming, and we expect that to continue. When we look at it on a school basis, there's a lot in the South and the West where population is growing. Just to help you understand how we define capture opportunity, it's really, the beds that need a head, the heads that need a bed, and that are really sort of the extent of how that need is currently being met by shadow market supply, by conventional multifamily assets. And so the capture opportunity is when bringing in kind of dedicated housing on a per bed basis, and you can see a number of schools, even though there's a lot of supply, there is a significant shadow market that dedicated student housing can eat into. 2 exceptions would be, or 3 exceptions would be, FSU, the University of Florida, and Georgia Tech, where there's a lot of dedicated student housing in those markets, and there that would be based upon, like, that absorption would be based upon enrollment growth to absorb that new supply. Georgia Tech has the benefit of being in an urban area, and so there may be some optionality to discuss. When we talk about development trends, where are things going? There's some things that have been accelerated. Certainly, high quality Wi-Fi. If it wasn't it was a big amenity, now it's become sort of a clear must. There's been an introduction of apps that allow students to make requests for services remotely. Maintenance and mirror being one of them, more outdoor and open spaces, and a movement towards a touchless environment through the addition of technology that's more on the hardware side than anything else. There are a couple of trends that have been reversed. Okay, so the 4-bedroom, 2-bathroom unit mix, bedroom bath parity has become more important in this environment, and so unit types that don't adhere to that have suffered. And then the size of any kind of common kitchen, given the fact that, if communal kitchens along the dining halls aren't necessarily always going to be open or under some sort of restriction, then the size of the kitchen might get bigger as opposed to kind of getting smaller. When we shift to look at transaction activity, you can kind of see that, price per bed was kind of bouncing around, and transaction activity was already sort of declining in 2019, kind of stabilized in 2020. We do think 21 activity will begin to pick up in a meaningful way And we've already seen, more broker OMs out there, more properties being brought to market, and we expect that volume to kind of pick up. When we look at, by university, some of the Arizona universities have had a lot of activity, as well as relatively, high price points. But we're beginning to see a fairly robust market, on the transaction side. And when we look, this is kind of further, this is 2021. You can see that, again, Clemson, UCF, University of Nevada, Georgia Tech, these are all, a lot of more Southern Western. You are picking up some other properties like Syracuse and College Park. So again, the sector kind of is coming back, and I expect that to continue. As well as institutional, and I think what this entire experience has kind of validated again is the defensive nature of student housing, particularly at well-located universities, closer to campus on a dedicated basis. Again, when we look at capture opportunity, enrollment growth, a percent of the applicants that are accepted, you all kind of get this sort of general notion of it's a sector that has a lot of defensive characteristics with decent kind of modest upside, and occasionally, as we've seen in some of the universities, some fairly explosive rent growth if you catch it at the right time. Blackstone, Brookfield, TPG, a number of institutional investors returning to the market because of those characteristics, and I think it will continue to attract institutional investors. One of the things that we wanted to sort of begin to explore a little bit further is our forecast. And so there's 4 forecasts, 2 of which has been released: our supply forecast and enrollment forecast by university. Our rent forecasts and occupancy forecasts are being finalized, and we expect those to be released in the next couple of weeks. So what's the takeaway, right? Enrollment in public 4 universities has grown to 2% a year. And if you look at overall population growth, not even from 1% now, current population growth about 0.5%. We do expect that enrollment growth will face headwinds, as Gen Z is a smaller cohort than the millennials, and that's why we're talking about this consolidation of winners and losers, and looking at being far more selective about which universities are going to look like they're the winners, and where there is opportunity to add supply. There is a significant capture opportunity in all of, and again, I'd say in 85-90% of the universities. But it does require a little bit of hunting and pecking to validate that. In terms of our overall supply forecast, we expect 2020, 21, and 22 to be a little bit lower, but then 23, 26 still picking back up to that 35,000, 40,000 bed level, or on a unit basis, more like 14,000 units. And we have that broken out by university. This is where we expect a lot of bedrooms to be delivered over the next couple of years. And you can see a number of them have a significant increase in the stock, but also that there's not as much in terms of inventory. So, one shouldn't be overly concerned about some of these schools because of the ability to have that product absorbed. On a growth basis, we do expect and have seen a spike in enrollment growth. We saw a decline last year, but even that decline, as we've mentioned before, was really on the 2-year universities, where most of the major schools kind of hung in, but now they're seeing a spike this year. And then we'll kind of come back to that, sub 1% overall rent growth, overall sort of enrollment growth across the entire universe of the Yardi 200. And here, I want to sort of spend a little bit of time on these next 2 slides. What we tried to do is take a look at what's the supply forecast, what's the enrollment forecast, what's kind of the delta, how these units are pre-leasing, this school pre-leasing, and what is the capture opportunity. And what you kind of take away from this, right, is, for example, Georgia Tech, we said, had a lot of supply coming. On the other hand, the enrollment forecast is also meaningful, so that even though the capture opportunity looks like a 0, we actually think that that's a favorable market. Same thing with Columbia University. no capture opportunity, but a lot of enrollment growth coming. And so you can see where, and a number of these universities have also meaningful capture opportunities in addition to enrollment growth. So these schools look quite favorable. When we go, and so for example, I live in Colorado. CSU Fort Collins is another example of a school that could use and will be able to absorb some new supply. Now, on the other hand, we've looked at some properties and some universities here where the sort of the other side is true. So I'm going to highlight University of Florida, right, where it's performing really well right now, but we look to see 7,000 beds being delivered, enrollment growing modestly, the capture opportunity being zero. So while current pre-leasing looks great, there's some storm clouds brewing. Ron, I think you had an additional kind of anecdote on University of Florida.
Yeah,
well.
I mean, there's also right now breaking ground is 1,400 dorm beds. So you have kind of the double. There's a strong pipeline for off-campus dedicated, but they're still driving forward with dorm creation.
So unless something happens on the enrollment side, University of Florida could be headed for some trouble. And this is what I mean by sort of like picking your spots. There's a lot of amazing opportunities in large universities, but it's not universal, right? So Central Michigan University is another one where we expect, enrollment to decline, and pre-leasing is not that great in the first place. So there are a few that aren't, that aren't well positioned. There are other universities, also use Kennesaw State, right, where we don't expect enrollment to increase, in fact, to decline, but there's a large capture opportunity and the university is doing well. So there, the play is eating into the shadow market. And so as long as you kind of know what you're walking into, right, with only really two exceptions, there's an opportunity to still perform well with dedicated student housing product. And then, if
Jeff,
yes.
Can I interrupt you here?
Sure.
First of all, I would like to remind participants that you can submit any questions that you have via the Q&A icon at the bottom of your screen. And then we did have one question come in.
Sure.
Where are you getting your enrollment forecast numbers from?
So what we are doing is we actually, we get the historic enrollment data, and we're looking at population growth in the states. We're basically looking at a number of other factors as to the viability of the university. So we actually do our own enrollment forecast, and we're looking at what's going on in that university, what's going on in the state itself, and what its kind of plans are. And so we've gone through, a reasonably detailed process done by our head of forecasting, Andrew Semis, to try to understand, and each one of these universities has a story to tell. So it's not universal. We think some schools are going to grow based upon both their capacity and ability, and then some aren't. And so that is a customized proprietary forecast we've developed. We do look at the demographics as well in terms of the overall cohort. And so given the fact that the overall cohort, right, of college-age kids isn't growing dramatically, a lot of these are share gains and share losses. That makes sense?
Yeah,
Ron, is there anything else that I've missed that you wanted to opine on that topic?
No, I think, one of the other factors we look at is high school graduation rates. Mm-hmm. And on the schools in the state, what is the percentage of in-state versus out of state and foreign? And so you take a school like Alabama that has a tremendous out of state.
That's 61% of the enrollment. Yeah.
They're likely to struggle more as a result of that capacity. We're in-state driven, will have more stabilized growth, or maybe just flat trends.
Mm-hmm. And so that's a meaningful topic, particularly with these large state schools, right? And then on top of that is always the acceptance rate, So a school that has and this is an example of Alabama, right? It's high out-of-state percentage and also a very high acceptance rate, right? So it's not as if it can sort of loosen up its acceptance criteria to fill in its sort of out-of-state gap. It's likely to struggle, or is one of the ones that could be struggling in the future. Ron, did anything else before we kind of move on? Did that cover it kind of adequately?
I think that covers it.
Yeah. Okay, great. All right. So when we kind of talk about some trends, as we shift into trends, there's a number of topics that we began to discuss, last fall and in the spring that really are now. And I think if you think about this, COVID has been such an overwhelming sort of crisis of was the industry going to make it through this sort of pandemic induced sort of disruption? And I think what we can kind of say, as we put the sort of the close to 2021 pre-leasing and occupancy, is that the industry's done just fine. And so with that kind of short-term of immediate issue resolved, I think largely in my mind, and Ron, I hope you are in yours as well, we now can say we can start to take a bit of a longer view towards trends that will sort of return to our consideration. All right. So, consolidation of the higher education system, value proposition of higher education versus the debt from certain majors and specific universities, distance learning and hybrid education, a topic we covered rather extensively in our spring webinar, and demographic trends, right? Both in terms of the overall cohort, the population growth in certain states that are growing, and the sort of in-state, out-of-state perspective of each of the schools, right? So on the first one, there is, and I think there will no doubt continue and will be, a consolidation in the higher education system. Some universities have been struggling financially. Even the large ones have had to go, again, out of state to generate more revenues. But those who are particularly small liberal arts schools, they're struggled. And many states are looking to consolidate their higher education systems to reduce costs and overhead, right? So, Georgia started its consolidation process. It's from 35 institutions to 26. Connecticut is also kind of consolidating the CT state system. And so you look at Pennsylvania, that they're consolidating. So there's going to continue to be a consolidation. And so what you're going to be looking for from an investment standpoint is to look at the places that are going to be the winners of that consolidation. The larger schools, the more flagship schools, and the smaller ones are tending to, we believe, will go by the wayside. And that's prudent and needed anyway, given the demographics. The other part that is relevant is the value proposition. And again, if you're picking schools that are going to make it and they're going to consolidate, then you're also going to want to look at where does a major, which school concentrates in which major, which has the highest earnings potential, right? And so that becomes another one where I think you've seen there were some interesting, stories or articles about, a graduate film program in NYU that had like 200,000 of debt and they're earning $30,000 a year in terms of their wages, right? So those programs are probably going to struggle to sort of continue to sort of make it. And so this is a topic we're going to return to. It requires a lot of sorting through to find not only the school, the major, and the earnings opportunity as a way of picking, again, winners and losers, even among the top tier schools. Another big topic that we had identified was this notion of distance learning and a hybrid education model. And what we kind of said, and this is kind of the topic that we did cover rather extensively in the spring, is that schools that are commuting in urban areas, right, are most exposed. So universities near cities would be most effective, particularly those with large in-state populations, right? So those ones are the ones that are most amenable to distance or hybrid learning and could be the most impacted. Now, the countervailing component, and something, Ron, you kind of mentioned that we've seen, is that there is a noticeable uptick in properties of student housing properties in urban areas that didn't, or smaller cities that didn't quite make it, but they're being converted to multifamily because
repurpose.
multifamily rents are on fire. Yeah, go ahead.
The repurpose of the older properties is a lot easier. So that's an easy transition into conventional. But there have been a couple sales that have taken place in the newer product that is more matched to bedroom, bathroom, which is an easy transition into a co-living space.
Right. So I guess the point I would make here is that there's a little bit of belt and suspenders under the valuations of student housing, because even if you're talking about even modest sized metropolitan areas, even if you have older product or product that doesn't quite make it, or is a little further from campus and doesn't quite hit the pro forma that you were hoping for, there is an optionality to convert it to another kind of use, and then also withdraws that supply from the student housing stock, right? Again, helping fundamentals. So we cover this topic. It has an interesting implication, for urban, with large in-state percentage of population of students. That also has an implication for optionality. And this is thing that's, in my view, not going to go away. It will continue to sort of evolve, and it's most likely to evolve in the universities attempting to broaden the reach of their educational programs and create a new set of revenue streams at a probably much lower price point to folks who couldn't normally attend or finance the in-person experience, which will become a bit more of the luxury kind of experience, and will also probably align better with dedicated student housing that is on a Class A basis. The other sort of thing that is absolutely relevant, right, is the demographic trends. So international enrollment had started to drop prior to the pandemic. It dropped a lot. Visas, and I'd heard from a number of industry participants that they had seen a pickup at sort of broken or failed move-ins because of visa issues. And so this could be a bit of a headwind to some universities that had, and we had identified this before, had 5 or even 10% of its enrollment in international students. High paying, very profitable, but it could be difficult to sustain that. The Generation Z as itself is a smaller cohort. The birth rate continues to decline. And so there will be demographic reasons for consolidation. Another sort of interesting kind of item is that there is an increasing gender imbalance at 2 and 4 year schools, as the number of males has been declining relative to females. And this is sort of something that the schools are having to deal with, and is, again, a bit of a headwind if more of the male population decides that a 4-year traditional in-person educational experience isn't worth it to them, or they're not attached to it. So again, a couple of demographic trends worthy of note. And we'll begin to explore these topics in a bit more depth in the coming year. Now, we're going to try something a little new for us, and that is we've got a couple of, before we kind of wrap up, a couple of poll questions. And what we'd like to do is get your input as to among the 4 topics that we could cover and put our resources into next year, is there any consensus? And please vote on which topic you'd like to hear from first if you only had one. So we'll kind of open that poll up. I can't vote, so Jeff Muth on our side is running this, but please do it. Jeff, what early returns are we getting on this?
Distance learning in the hybrid education model is in the lead right now.
Okay.
People are still voting. Okay, we got about enough people. I'm going to end it now and share the results.
Sure. Okay, so distance learning and hybrid education model clearly coming out number 1 demographic trends. So we will turn our attention. I think if we go into the next year, we'll cover distance learning and demographics in more kind of. We'll put those higher up in the priority, and the other 2 we'll kind of we'll put a little bit at the back of the bus. So that's fantastic. Thank you so much. Now we also have a second poll question. This is the last one. We're just going to test it in our final poll question. So in terms of where you're spending your time between acquisitions and development, where do you think the best opportunities lie? So that's another one that kind of interesting. And Jeff, any kind of early returns on that?
Sorry, I was on mute. It's about 50-50. Here we go. I'm going to end it because almost everyone's participated.
Okay. All right. Yeah. Okay. Well, I guess we got to cover both. Which also says, that the good news is that means that the depth of the sector in terms of both continuing to add supply where it's relevant and a good takeout market for that new product. So that's great. Okay. So let me kind of move forward. So to kind of wrap all this up before I turn it over to Megan with any final Q&A, and this slide shouldn't be a surprise to you. It's the same slide we started the entire talk with 45, 50 minutes ago. When you look at this, what it kind of says is, look, the student housing sector went through a tremendous amount of disruption and uncertainty, and in my view has kind of come through it, right? That it didn't slow deliveries. There was a little pause on transactions. All fundamentals, the fundamentals of operations and pre-leasing and rents look, awfully good, having gone through this sort of a disruption and dislocation. And that as we move forward, the emphasis will be on picking the right schools, and in so doing, picking the right investments and picking through. And we've tried to give you some breadcrumbs here of the ways in which our data can be used to help you think through what are the best opportunities, where they're located, which schools are going to be the winners, and which schools you might wish to kind of like steer away from, given the plethora of opportunities. But overall, the sectors has done very well. It's validated its business case, and I think is set for just a tremendous growth and opportunity. As an investment class, demographically, there'll be some headwinds. There's always problems in any kind of investment, but out of those are also significant opportunities. And I think that's where I would have the takeaway from here. So some upcoming events. Ron, next week will be in Huntington Beach. Would love to meet with any of you who will be there to talk about what we see in the world and share these slides. And well, of course, I do want to mention that everyone here will get an invite tomorrow to download both the recording and the slides. So, don't worry about that. And then also we'll be doing the fall multifamily national outlook at the end of October. And that pretty much wraps us up. I do have to sort of keep the lawyers happy and show you the copyright notice and the disclaimer. And Megan, are there any kind of final questions that we can cover?
Yes, we do have a few. What
Fantastic.
types of universities are in the best position to do well in the next 12 months?
Well, I mean, I would kind of, if you looked at what we've seen here, we've seen schools that their enrollment kind of hung in there. The number of beds isn't out of line, and there's still a significant capture opportunity. And even so, I would say broadly based, right? We really only found 2 schools out of 200 that we were concerned about on a longer term basis. All the other ones, again, with a few exceptions where there's idiosyncratic problems with particular properties, are all in pretty good shape. And I would sort of bias toward Southeast and Mountain. Where is population growing in the states? And that is the Southeast, Texas, and the Mountain West. Those areas are doing quite well. There's robust population growth, and with that will come in more than enough in-state students, and that's where I would be kind of looking for the areas of most growth. Great.
How does the trend in enrollment growth, specifically out-of-state enrollment, affect the investment in new bed construction and delivery for universities that have larger capture opportunities?
Well, I mean, this one, and Ron, feel free to bust in on me in this one. So if you look at this, there's a couple of vectors you're looking at, right? You're saying, well, first of all, how exposed is the university to existing out of state? And we mentioned University of Alabama as one of those outlier cases where it's 60% of the enrollment is out of state, and they accept something like 70-ish% of the applications. So they're exposed to larger sort of demographic trends as well as expense trends. And there one would be a little more selective about adding new supply. So schools that are a little more selective, who have a little more in-state, who are in states where the population is growing, they'll tend to be a tad more insulated, right, from these effects. So growing populations, growing incomes, I will say the Carolinas, Georgia, Texas, Colorado, Utah, these are all states that are going to have state schools that are large and growing, and the state has the ability to support that university as it grows.
I think you could lump Arizona into that, Jeff.
Yes, your home state. I was just in Tempe for a performance 2 weeks ago, and that school is just crushing it, in terms of enrollment growth and development.
Yeah.
Great. Next question. Does the spike in rental rates into the end of lease up give us guidance on the 2022-23 school year? Could we see fundamentals above historical norms given how strong demand is?
I think that definitely is an indication. Now, we should be clear that 2021, 2022 was a bit of a pop, right? So I think what it says is that we would expect as we head into the 22, 23 leasing season, which will kick off, late October, November, you may see a more kind of normal pattern of pre-leasing, right? Those nice pre-leasing curves that kind of gently have a nice S shape to them, which we did not see this year. So that means that sort of, again, rent growth may still end up in that 3% range, but it will have less uncertainty associated with it, where this year it kind of, was almost a little bit of a nail biter.
Thank you. Is the decline in male enrollment impacted by the need for more workers in the trades industry?
I think it's a question of value relative to cost, and there is definitely a need for tradesmen, and the earnings of those are increasing, and that would be one. That would be on the purely economic rationale that the cost benefit associated with a high price college attendance is worth it to fewer men than in the past. That really that 10-15% kind of gap, that's at issue. There could be other cultural topics that are a little bit harder to wrap your head around, and maybe is that a driver or an excuse? A little hard to say, but if you look at where wages have been growing, there you see a bifurcation where college educated certain majors in certain technical fields garner extremely high earnings potential, but there is a group of majors that is really hard to sort of justify the cost of a college education relative to the earnings for majors that aren't in demand and don't have a deployment in some of the finance or technology industries. So it's definitely a thing, right? How that kind of plays out, I think, is a little bit of a struggle, but it is, from a societal standpoint, somewhat of a concern. At the same time, there has been a desperate need for a system of technical education, somewhat akin to the German model, which we do not have in the United States and is hurting us. And that role had been largely filled through immigrant labor, and that is not happening. And so there are shortages in sort of skilled trades of a meaningful nature.
Great. Are you aware of any large deviations in vacancies between multifamily and student housing?
That's a really good question. I mean, given the fact that most of the universities, again, with the exception of I'll call it a troubled lease up or two, have actually been very good. I'm not really, there really isn't much of a gap here. Again, the problems with student lease-ups tend to be sort of idiosyncratic as opposed to generalizable. As you well know, the multifamily industry is just on fire as there's been a significant movement of populations, and supply has not yet responded to the movement of population. So I haven't seen a significant delta, but I would be, if you're looking for sort of distressed opportunities, you'd be kind of looking at the properties in the student housing sector that didn't make it. And if there is, cities where those exist, where you convert it into conventional assets, because just about every city in the United States, from a conventional standpoint, is kind of crushing it. There are only really downtown San Francisco and downtown DC have not recovered from the pandemic kind of initial slump.
Great. We had another question. Does Yardi's data cover private universities?
Yes. I mean, yes, it covers both public and private universities. We tend to highlight the large public schools, just because they're large markets and they have the ability to absorb information. But we cover something like 1,000, actually 1,200 universities, including all the private ones as well.
Thank you. What types of trends are you seeing in terms of cap rates?
Compression. I think we've seen a lot of compression across multifamily assets, period, due to both income growth as well as the reduction in debt costs. We've seen this little, pick up in the 10-year over the last couple of days, which I do think I would expect is somewhat, self-sustaining, and I don't expect it to go down as long as growth is picked up and the notion of inflationary pressures are there. But cap rates have traditionally been fairly wide relative to multifamily, but multifamily cap rates have significantly compressed, and we would expect student housing to come partial of the way down with it. So values are up. There's been a lot of hesitancy on trading, but again, I think that is dissipating or has dissipated.
Okay, great. And then we can end with this question. Are we still seeing an impact on international student enrollment at universities that have large international programs?
I'd say yes. But one of the, I think, earlier things we had identified, I don't know if we had pulled this slide, Megan, was while enrollment and applications from China have come down, and that was a very large place, a source of students. International applications from all the other countries were significantly higher, but because China was such a large component of enrollment, overall international applications were down a bit. And I think that it will stabilize as the rotation of international applicants shifts away from China and toward more countries. I think, if I'm not mistaken, we'd seen a large number from Brazil and some other countries. Megan, do you recall that slide? We may have pulled it, but I do recall that was a fairly interesting slide.
Yeah, I believe we pulled it.
Yeah. So good question. Again, I think universities that were overly dependent on China are seeing a little bit of a trouble, and there have been some problems with people getting their visas, being able to attend school. It's not been easy to get into the United States if from a foreign country. So those have been challenges.
Great. Well, I think we can end there.
Okay. Want to thank you all for your time and attention. And Megan, if you could wrap it up for us all.
Sure thing. Thank you for participating in our program today. We hope you enjoyed it and found the information and viewpoints helpful. If you would like to subscribe to any of our free research, please either log on to yardimatrix.com or contact us and we will add you to our distribution. A recording of this broadcast and accompanying slides will be available after the program. A special thanks to Jeff Adler and Ron Brock Jr. for their commentary today. I would also like to thank Jeff Muth and Mary Chu for running the web program and Claire Anhalt for her contributions to the content. This has been a production of the Matrix Division of Yardi Systems, Inc. Copyright 2021, all rights reserved. This concludes our broadcast. Thank you.